money. So I've got a good 10% left to go on crypto. I'm very constructive on crypto. I'm a believer in it. You have to make a binary decision. Either you believe in it or you don't. I'm on board, so I'm investing. But I actually allocated 7% of the capital, but capital appreciation was so strong in the last 2 quarters across a lot of these platforms that it blew right past 10%. I haven't trimmed anything yet because no individual position. My largest right now is Ethereum, but I also own a lot of Solana, a lot of Polygon.
A lot of talk heading into Q1, obviously, of next year, focus on inflation as well. And, the recent changes that we had from the Fed, tightening their stance on this. Give us your take here. Do we get, I even read an article on the weekend talking about that deflation word. Do we get a flood of oversupply or more goods coming into the market to offset this at some point next year to kind of bring this back down to earth a little bit? Or does it take longer than that?
Well, the narrative on inflation just 2 months ago, 60 days ago, was it was being caused by disruption in supply chain, global supply chain. And that was true. But now when you start to look at the price of gasoline in cities like San Diego and San Francisco, north of $5 a gallon in the US, and the price of bread up 13%, chicken up 19%, beef up 24%, that's real inflation. And that's the result of having so much free money coming out of helicopters for so long, including that last $1 trillion infrastructure bill, which hasn't even hit yet. Now, that's the negative news. So it's not just supply chain disruption. I think what's going to happen is supply chain problems will slowly get better through Q2 and Q3 and Q4, not in Q1. There's still big problems into the major ports in North America. However, we saw that bill, Build Back Better bill, just basically get dead. I mean, it's gone. And that is very important for not putting any more fuel on the fire and inflation. The economy in North America is on fire. It doesn't need any more stimulus. And so, for whatever reason, the checks and balance in the system made sure that that was going to be, I thought, very bad policy, a really bad idea. And it got just basically put behind the barn, and you know what happened to it. It's gone. So the good news for investors on the S&P 500 is this. You've got total gridlock in Washington now. Nothing else is going to get done. Zero. The midterms will hit. The incumbent always loses a ton of seats in the House when that happens. This time for Biden, it looks could be much worse because they didn't like the socialist swing that he was pushing on them, and he was really kowtowing to that side of the party. And I don't like to get into politics. I like to get into policy. But the good news is that bill's dead. Total gridlock, nothing more out of Washington. This is always good for markets. It gives you more certainty that politicians can't do anything else for the rest of Biden's mandate. Great news.
Let's talk along those lines. Let's talk crypto markets. Another exciting year, another very volatile year for cryptocurrencies. You've been very active, very vocal in this space this year. The bigger conversation, I guess, always seems to come back to this adoption by institutions and the need for further regulation. Give us your take. Paint a picture here as we head into 2022. What happens?
In 2022, nothing's going to happen in the U.S. market. I don't think they'll even deal with stablecoins. That geography is going to go through a very long process before it institutionalizes crypto. Everybody understands that. The optimism that was around in February last year around the first U.S. ETF, when the ETFs came into the Canadian market, and you have to hand it to the Canadian regulator. They have been very strong in terms of innovation and letting these new ideas of payment systems be tested in the markets and then adopted in their policy. We just had 2 new licenses granted here in Ontario. They're pan-Canadian for market exchanges. That's fantastic, and that's real innovation. And the way I like to look at that, and this is just a personal opinion, I don't have any insider information or anything, but the OSC has consistently been great innovation, great innovators, very experimental, but never did anything outside of the purvey of the SEC. They were very coordinated. So in a way, Canada's a bit of a guinea pig market for what the SEC looks at. That's a personal opinion. So they're watching what's happening here. We're getting very strong adoption of these various payment systems, crypto platforms, cryptocurrencies, crypto infrastructure, all of that, these different chains. Canada is leading the charge globally in getting investor capital, which is absolutely fantastic, including mine. And other geographies are starting to look at Canada in terms of leadership, in the sense that they're not crypto cowboys, they're not going against the SEC. They're being very thoughtful. So geographies like United Arab Emirates, I just spent 10 days there to talk to the government about their plans on cryptocurrencies because I'm very interested in investing there as well. I think for institutional investors now, the new game plan for 2022 is to find the geographies and find the regulators that are going to be more innovative, if you want to call it that, or more liberal, if you want to use that word, and invest in those geographies while we wait out policy in the United States, which is going to eventually happen. But you've got to be a global investor if you want to enjoy the innovation being done within crypto. And I will always argue this regarding crypto. You know, I don't think Bitcoin's Bitcoin. I think Bitcoin is software. I think Ethereum is software. I think HBAR is software. Polygon is software. I invest in all of it. It's the infrastructure of the internet. And lastly, because I remember talking to you guys at the beginning of last year, and I was saying I was thrilled that my crypto exposure in February and March, the end of Q1, was 3%. Well, through more investment this year in companies like WonderFi and Immutable Holdings that were brought public on the NEO Exchange in Canada, more innovation, you got to hand it to the NEO. My exposure now across crypto, including my work with FTX and with Circle in USDC, I'm past 10%. That's a ton of the operating company's capital involved in this sector.
Mr. Kevin O'Leary, thank you so much for all the insight. I have a very similar, I was going to talk to you about something else, but you just made a good point there about your 3% turning into 10%. Is that something we always hear people talk about, you know, trimming once it gets to a certain level? It seems like your conviction's pretty strong. I have a feeling like you may be adding to that 10% rather than trimming. Is that a policy? Because obviously with some of the funds, is that something that you're doing personally? Does it get to a level where even though we're bullish, we start to trim back a little bit just because we're overweighted? Or how do you play that sort of aspect?
Well, that's a great question. I use the same approach I use to equities and debt. I never let one single position become more than 5% of the portfolio, never more than a sector ever gets past 20. So I've got a good 10% left to go on crypto. I'm very constructive on crypto. I'm a believer in it. You have to make a binary decision. Either you believe in it or you don't. I'm on board, so I'm investing. But I actually allocated 7% of the capital, but capital appreciation was so strong in the last 2 quarters across a lot of these platforms that it blew right past 10%. I haven't trimmed anything yet because no individual position, my largest right now is Ethereum, but I also own a lot of Solana, a lot of Polygon. Polygon guys I met in Dubai, I was so impressed with their whole technology of aggregating transactions on top of Ethereum and then reducing gas fees or costs dramatically. And any time you can add efficiency, you can reduce friction, reduce costs, be more productive, you want to invest in teams that do that. So I invested in them as well. I'm just finding, you know, I look at deal flow right now, 45% of my day in looking at new deals is in the crypto space. That's almost half. So I'm going to continue to be very constructive in 2022. I'm very excited about innovation there.
Great stuff. Before we let you go, we don't want to take up too much of your time, Kevin. Let's look forward as far as the market is concerned going into next year. I just read a stat, NASDAQ underperforming the S&P 500 for the first time since 2016 this year, when it seems like all you hear about is tech stocks and tech headlines leading the market. So a little bit of, you know, maybe a surprising year this year. What are you excited about heading into next year?
I think tech will remain volatile. I think the Fed will move in with rate hikes, which necessarily doesn't kill bull markets because it indicates strong underlying economy. But it really makes you want to be constructive in equities versus fixed income. I think that's going to be the challenge. I've changed my weighting at the beginning of last year from 50-50 fixed income and equity to 70-30. And now with crypto in the mix as well, I've reduced even more of my exposure to fixed income because if you're in cash, for example, and I'm not telling people not to be in cash, but you're basically being taxed at 6%. That's inflation right now. So you've got to find other places to deploy capital depending on where you are in the risk curve. And so I'm looking again at real estate. I'm looking again at hard assets. I'm gold. I'm crypto. I'm trying to find places where I'm not going to lose 6% in 12 months because I think inflation is going to be around and you've got to be constructive. You want to look at high quality balance sheets for the majority of your portfolio. You want to look very hard at their ability to continue generating cash and distributing it through dividends. And you know, there's every once in a while you get a gift. And I recently increased my exposure to Disney. Everybody hates it right now, but it's a behemoth in terms of being able to grow with its franchises. And look, I may be wrong at the beginning, but long term I like it because of its balance sheet. And eventually we'll get rid of this pandemic and that'll help Disney, obviously. But you have to pick where you want to be. And I think you want to really be a stock picker in 2022 as opposed to just buying indexes. Unless you can find indexes that are actually smart in terms of being rule-based, staying away from the airlines, for example. You look at United. It had 7 or 8 billion in debt pre-pandemic. The thing's got over 20 billion now. It's an upside-down balance sheet. Why would you want to own that? You got to avoid those kind of disasters.